Welcome to Roots of Equity, a podcast dedicated to sharing our local perspectives and lived experiences around diversity, equity, and inclusion in the Caribbean. In this podcast, we seek to birth our own vocabulary around inclusion, in our language and in our own words. I'm your host, James Walker, and in this episode, we dialogue with Dawn Nelson, who we can happily call the Queen of Cashless, working tirelessly on the topic of financial inclusion and digital transformation in Trinidad and Tobago. Dawn brings a fresh lens to inclusion by speaking to financial inclusion and the way in which our financial health impacts our mental and physical well-being. I'm really excited for this conversation as it takes a brand new spin on inclusion. Roots of Equity podcast, James Walker. I'm here with Dawn Nelson. Dawn, would you like to introduce yourself to us?
Absolutely. Hi, James. I'm Dawn Nelson. I'm the Vice President of Financial Sector Transformation at the Trinidad and Tobago International Financial Center. That's a bit of a mouthful, so we're just TTIFC.
TTIFC. Excellent. So what does your job entail at TTIFC?
That's a great question. So our mandate as the IFC changed in April 2021, and we're now focused on three core areas. We look at the digitalization of government payments. We focus on financial inclusion and driving that up. And we also want to position Trinidad and Tobago as a regional leader for fintech enablement. So that has a lot of good things all mixed up in there. And the overarching umbrella of our role, as we see it, is to move Trinidad and Tobago to be a cashless society.
Right, that's interesting. So the role of a cashless society, you would believe, also then enables somehow the financial inclusion that's also part of the remit then?
Absolutely. That's a big focus of it. And in fact, the two other pillars, digitalization of government payments and enablement of fintech, to play a bigger role in our society, really dovetail and have a nexus between financial inclusion. If you get them both right, financial inclusion naturally increases.
So what I think would be good to orient ourselves around would be this topic of financial inclusion. I mean, generally, this podcast is around inclusion and diversity and equity. Financial inclusion sounds like it's a subset of inclusion, but let's explore what that actually means. So, I mean, what does financial inclusion mean to you and the organization?
Right. So financial inclusion really refers to efforts to make financial products and services accessible and affordable to everyone. So you want, regardless of your geographic location, your gender, your socioeconomic status, your education, you want full equitable participation in financial services and in that sector. And really, the focus on financial inclusion strives to kind of bring those barriers down that prevent people from participating in the sector and using those types of services and products to improve their lives. So that's really at the heart of financial inclusion. And I think the World Bank said it pretty well when they talked about financial inclusion facilitating day-to-day living and helping families and businesses to plan for better quality of life and unexpected emergencies. So your ability to save, your access to credit, your access to insurance, being able to start and expand a business, investing in your education, your health, and really insulating you from any shocks that may happen where you're required to draw down on finance in order to really help you. All of those are great aspects of financial inclusion.
But it makes me just think about, again, how it plays in the wider inclusion space. So, for example, maybe your company is accessible to people from a socioeconomic or LGBT, but it's accessible, you're going to get through the door. But is the quality of the policy?
Correct.
Or is the quality of the performance review?
Yeah.
Is your boss qualified enough to have a proper performance conversation with you?
Yeah.
And they may not be.
No.
And it may fall down
you may
there.
not understand what animal I am. You may not understand. We have those conversations about like millennials versus, the Gen Zs versus the different behavior types. And I mean, yes, we do look at it through the cashless society lens, but I don't need to go down the street to find somebody to have an inclusion conversation. I can have that conversation right in my office with the tea lady, with the driver, and I'm not calling I'm not specifically calling what I think are lower jobs. I am just saying that people come from society. You know what I mean?
Okay, and this is going to sound a little naive, but we need to get to the basics. Is there an issue of financial inclusion in Trinidad and in the Caribbean more broadly?
Unfortunately, there still is, and Trinidad is a very interesting, a very interesting use case because we have several key characteristics that should have our financial inclusion a little bit higher. We have great mobile penetration, we have a great educational system, and we also have good access to financial institutions and services and products. But yet, one of the hallmarks of that participation broadly and that enjoyment of financial inclusion is the use of digital financial services in order to really reach as broad a section as possible. And that, interestingly, we see a little bit on the low side.
Right, okay. I mean, I'm trying to conceive as to the factors that might cause someone who does have access to a credit union around the corner, maybe functionally literate, and have a source of income, might still be excluded from the financial system. What are the kind of factors at play that are causing a share of the population, a significant share, let's say, to not be included?
Well, interestingly, and let me draw upon our recent digital payments and inclusion survey that we recently conducted. But let me take a step back to 2020 when CAF, the Latin American Development Bank, looked at our economy and they had a couple of things to say. They noted that there were 1.5 million bank accounts. They noted there was 200,000 credit cards in circulation. And they also noted that there was approximately 700,000 debit and credit cards.
Wow.
So you're talking about a society where access is not necessarily one of the driving factors. So we wanted to get under the hood, so to speak, and kind of understand how do you have a profile like that, but yet see challenges and, as you said, barriers to financial inclusion. So that's why we conducted the survey. And in doing the survey, we found very similar insights as CAF did, where we found 76.5% of our population have access to an account with a formal institution. So if you do the math on that, you have 23.5% who don't. And when you really kind of tease that 23.5 a little bit further, you find that there was 49% of that group that was voluntarily financially excluding themselves.
Sorry, when was this survey?
We wrapped it up in September of this year.
And this was done by the IFC?
It was done by the IFC in partnership with the UNCDF, which is the United Nations Capital Development Fund. And we surveyed 2,000 households. It was a randomized surveying method. And that is extremely statistically significant in terms of being able to extrapolate to what the population as a whole, the behavior that you're seeing there.
Okay, let's go to the voluntary exclusion. Because are you being excluded if you are voluntarily excluding yourself? Does that?
Yes, because when you are excluded, regardless of whether you are doing so yourself or whether the circumstances are excluding you, you are being denied an opportunity to participate and to get some of those benefits that we just talked about. Invest in your education, be able to withstand a financial shock, be able to participate widely, access to credit, start a business. So why are you voluntarily excluding yourself? And that is where we found some very interesting insights. One of the key reasons was that the products and the services that were available did not align with the needs of these people. And when you dug deeper into it, there were aspects of being able to understand the products and services, being able to access them in terms of those requirements, KYC, know your customer, and being able to satisfy that to participate in the formal financial economy. You found that in some instances, someone in the household already had a bank account and they felt, well, okay, there's no need for me to have one as well. And there were several interesting profiles of citizens who would have liked to, but did not feel that it was appropriate for them. It didn't match their set of circumstances. And when you look at the enablers of financial inclusion, I mean, we talk about wanting to focus on pushing cashless, and cashless is not the be-all and end-all of the goal. It's about an omni-channel, applicable, customized product or service that could meet anyone where they are. And there seems to be a bit of a gap on that aspect in the country. So, for example, if I'm a farmer, let's say I'm a smallholder farmer, and my crop cycle entails me having those injections of cash maybe quarterly or maybe in 6 months, depending on what kind of crop I'm farming. And I'm utilizing a loan product that sees me having to facilitate that loan every month. Then there's a mismatch. You know, so I, the smallholder farmer, may look for some other type of financial injections, maybe outside of the formal financial services. But to your point about being able to understand the product, there's also a barrier, I guess, maybe sometimes from a psychological perspective of, is this for me? Can I understand the nature of this product? Maybe I prefer to just run a susu because I understand that. Right? And in no way, shape, or form are these people that we're talking about not cognizant of what they need. They actually know what they need more than anyone.
That's interesting.
You know, but it's the product and service that is not necessarily meeting their needs. And as a result of that, some of them are distancing themselves from it.
Yeah, I was totally going to ask you about Susu and you said Susu. So let's talk Susu.
Yeah.
One thing that strikes me about Susu would be the level of trust that one has to place in the other people in the Susu. And I wonder whether if you ask the question or if you've gotten anecdotal feedback around the level of trust in the institutions themselves that are providing these products. And
well, perhaps indirectly. Let me quote some of the data insights, and it painted a really interesting picture when we kind of delved into the story behind the numbers that we were seeing. So, for example, 48% of our population set financial goals, right? So that's a good thing, right? 74% actively save. But when you delve into that 74% and their active saving, 81% of that 74 save at home.
in cash.
In cash.
Wow.
Under the mattress.
Right.
Like literally. So there is that. And trust is such an interesting dynamic because certain participants in our society have more trust in their informal financial mechanisms than they do in the formal sector. And I'm not going to say pigeonhole it and say, okay, it's banks or whatever. I'm just talking about the formal financial sector. And so, and when we also looked at it, 65% of all general transactions, paying your child's school fees, paying your phone bill, paying your rent, done in cash, you know. And so you see, back to your point about trust and who do you trust? There is a feeling of non-alignment with the products and services within the formal financial sector. And as a result of that, I don't trust it. I don't understand it. The way in which it's probably explained does not resonate with me. And I prefer, one, to transact in cash, and I prefer to use informal mechanisms in order to achieve my goals. Because remember, 48% of them are setting financial goals. 48% of us are setting financial goals.
I don't know if you did also collect demographic data in the survey itself, but I'd be interested to know, are there certain communities? Is there a rural-urban divide? Are there certain ethnicities, nationalities, or gender or otherwise where you're seeing a higher proportion of underserved or unbanked people?
So the lens through which we did this survey, we looked at access, quality, and basically people's ability to trust and participate in the particular service that was offered. So access, usage, and quality. So to your point about did we see any type of barrier based on demographics or rural-urban divide? Yes, to a certain extent, because formal financial institutions tend to settle in densely populated areas. And yes, the further away you got from those access points, which tended, of course, to be towards the more rural areas of the country, you did see a marked increase in financial exclusion. But did they feel that they were being financially excluded? Not necessarily, because again, awareness was a factor.
Right.
So I don't know what I didn't know.
Okay.
Right. And there was an interesting statistic in the survey where when we interrogated how many people would pay for general transactions using debit cards or links, 12%.
Wow.
And also in terms of people who were not aware of online payment options for government services, 87% weren't aware. And we don't even talk about the third pillar of our mandate as the TTIFC, which is the fintech proliferation and trying to enable the use of fintech. 16% didn't even know what a fintech was.
Right.
But yet, interestingly, they knew what PayPal was. They knew what other, modalities that might have been used in other markets were. So it's not a savviness problem. It seems to be very much a quality problem. What does the market offer to the different type of customer and citizens?
So if I was the CEO of a financial institution listening to this, or a bank or a credit union, an insurance company, maybe I should be asking the question, do I actually understand the full customer base? Do I understand what they need? And do I understand how my marketing teams and my salespeople are speaking to people? What are the words they're using? What is the messaging that they're using? Are you explaining these products well enough? Is your product even the right product that they might need? It sounds like, I just wonder whether the leaders of financial institutions in our region and in Trinidad are cognizant of the share of the population that they may be excluding. Because I don't imagine it's a very deliberate exclusion, because if I could grab an extra 5-10% market share, sounds like a good proposition, right?
Good deal.
So what... do you think they're aware of it, and what is their response when you speak to these kind of people? What's their take on this?
So it's a fairly complex balancing act. The reason for the risk aversion of financial institutions. Why don't you want to lend to every and anybody? Why is it that you have these barriers and these challenges for people to really participate and get access to your product? That goes right back to, profitability, but it also goes back to the percentage of applicability of those restrictions and those barriers go to the real heart of the health of the financial institution, and that goes outside now to their cross-banking relationships. So the reason why a lot of the formal financial institutions are seeking to have these high barriers and make sure that they are vetting customers really intently is because once those relationships that they need with their external banking partners become frayed, or if they get blacklisted, then that's bad for everyone. But what we have seen, and it's been useful in other markets, is the use of low-tier type products with less risk profiles that can meet people where they are and that can perhaps have a lower barrier to entry. So, for example, the central bank had made a pronouncement that you could have these low-tier KYC accounts where you would need one form of identification, you could provide a phone bill, and you can basically get access and open an account. There was not necessarily the greatest response from the formal financial sector. You didn't see a proliferation of these low-tier accounts being offered and people being made aware that this was even an option. So you had a policy decision, a regulatory decision that was the right one, that was really meant to accelerate and kind of provide people with those options, but you didn't see the knock-on effect in terms of product design. So back to your point about the CEOs and of these formal institutions, and what are they thinking and how are they really kind of ideating the kind of products and services that people need. I think it really it needs to go back to the drawing board.
I want to talk a little bit about psychological safety and whether this is at play, because I mean, this could just be a pure fantasy here, but I could almost envision someone who would like a loan from a formal institution or would want insurance, but maybe don't feel the confidence to walk inside that branch or walk inside that insurance and confidently express themselves in such a way that they feel that they'd be respected to get a product and be taken seriously. Is that a real thing? I mean, does that affect people's psyche and their confidence to approach these services, or did you not find that?
The survey itself didn't kind of unearth that directly, but we certainly heard that people felt that it's not for me. And I think in many cases, persons who are very aware of what the requirements are to be able to access these financial products as they are currently formed in the market, I think they kind of knew that they wouldn't meet the criteria. So like if you think of a stay-at-home mom who basically is receiving her source of income from the sole breadwinner who's in the house and has to provide proof of funds, difficult to do. If you think of someone who's renting and maybe they have a difficult landlord who's unwilling to write the letter to say that this is the proof of address and they don't have any utility bill in their name, challenging. If you think of someone who basically may only have one form of ID or none, again, a barrier. If you think of the young entrepreneur who has a great idea and maybe wants to access capital, but has no track record, no financial footprint in order to be able to show, a credit history to a financial institution. These are real life cases that exist, and that in of itself puts up a psychological barrier. Because when I sit down with my great pepper sauce recipe at home that I think I could possibly now go and market, I feel excluded even as I contemplate how do I grow this idea. And psychologically, I may not even seek or explore possible financial support from the formal sector. So yes, I think there is a psychological impact, and I think there is a psychological disadvantaged type of situation where people, they give up before they have even tried. Because we sound the way we sound, because we work where we work, I don't know that I don't create a psychological barrier for people. You know what I mean? I think that is one of the things we're dead serious about the community outreach. I want the woman on Charlotte Street to talk to me, the one selling the panties and the bras, and be like, look, this is what I need, darling. The regular average person, when I could do that, I will feel yes.
Which comes down to language as well.
It does.
Because we had this entire conversation in standard English.
Yeah, yes. So I tried to throw in a little, there are many people who are fluent in Trinidadian Creole English, and that is the only means that you're going to really connect with them around a topic. Let me tell you, we went to the Namdefco market, and to underscore the point about don't think you know what people need. So we sat in the tower and we were like, right, man, cashless is security. Everybody, crime is a thing, and, everybody would feel insecure. And so there we march into the Namdefco farmers market to meet with the farmers. And we started down this security thing and your safety thing. That was not their burning issue. Their burning issue was around the cycle of their crops and their ability to service loans. Their burning issue was around when they take shocks from floods or from whatever, or I don't know, a drought, and they're not getting their grant relief in a quick enough manner so that they could get back to...
Right.
And that shocked me.
Yeah.
It shocked me because I thought, my God, look, I know this, I look at the survey, well, fantastic. So it's so important to have those conversations and let people tell you what it is they need.
That's so true. I mean, across, it's not just about financial inclusion. That's the story of inclusion. You need to listen to people. You need to meet them where they are. You need to listen carefully and be open to what you're going to hear. Because what you're going to hear is not what you expected to hear. It wasn't in your plan.
I was like, I told the team, I was like, everybody stop talking. Stop talking. We don't have a clue. I'm like, let's listen.
Yeah.
Yeah. And it was such an eye-opening experience. So imagine if you do that with women, or imagine if you do that with micro-entrepreneurs, or imagine if you do that, that was just the farmers. And a small section of the farmers.
Right.
What would we learn if we truly listened? But I think our colonial history impacts us because that is what makes the doors seem closed. That is what makes the suited and booted seem like, they think they're better than. And as a result of that, those people are not sitting there being marginalized. Their lives are impacted, yes, but they don't want to come in. They don't want to have a conversation with you because they don't believe you will say anything that is in service of them.
I wonder whether there is an aspect of what we are trained in school or not trained as children in our societies around an approach to savings or an approach to credit or an approach to entrepreneurship. Mm-hmm. Is that something that the IFCs would be concerned about, that we're not introducing these concepts at an early enough stage to allow people to self-select into inclusion?
I think, yes, we are concerned. And yes, we do intend to, make our contribution in that area. Yes, we do think we are waiting way too late to be able to engage our youth in proper and prudent financial awareness and participation. There are some very good initiatives that have been done within the society. The central bank has a fantastic program driving financial literacy. They go to schools. Recently, there was a great stock game that came out, Wisdom CRM, that was focused on really having school age children participate and utilize it. And it's a missed opportunity that we don't do more of it, because when you expose a child and you raise awareness, you can then now send that awareness back into the home, because the child now goes home and they have a conversation with their parents, and maybe it's something that their parent hadn't heard of, and you get someone who knows something more than they did yesterday, and then they feel a little bit more confident to explore that a little further, and you can get that participation. So we definitely intend to focus, now that we have this lens into the behavior behind some of the low participation rates. Now we want to do the community engagement. Now we want to help architect some of those programs and some of that outreach. And we firmly believe in meeting people where they are. You know what I mean? We're in the nice offices up at the waterfront, but I mean, I want to be comfortably on Charlotte Street or High Street in San Fernando, talking to vendors and understanding, what could we do? What message do you want to send to the financial institutions about the type of product and service that you need? And I think that's the way the conversation needs to go. But it has not traditionally been that way. It's been a kind of one-size-fits-all, kind of take it or leave it approach. It's changing, but we need to be a little bit more data-driven about how we change it. And I think that is what the survey really allows us to kind of have an opportunity to do.
Now, I mean, someone could probably ask, and maybe I should have asked this before, which would be, well, I understand a bit more about financial inclusion, and it sounds like it gives people a good opportunity to improve their lives financially, but to what extent is someone being financially included benefiting other aspects of their life? Are there links to health outcomes, education outcomes in their children. What are there other benefits from being financially included?
Absolutely. They are massive. So, for example, if you think of the nurse, right? So let's pick a nurse, let's call her Joan. And Joan has no access to health insurance for whatever reason, or she can't afford a level of health insurance. And because of whatever condition Joan may have, she is unable to go to her job with the type of regularity that she needs to. As a result of that, Joan begins to attract the attention of HR. So Joan's inability to have an insurance product that allows her to seek maybe the type of specialist care that she may need has her being away from work long periods of time, now places her income generation in jeopardy because she's not showing up for work. She now has the stress of not only what's going on with her medically, but now as well as that, she has the stress of wondering about what am I going to do about loss of income. And you see the knock-on effect of Joan's inability to afford an insurance product that gives her access to the type of care that she may need. Perhaps, unfortunately, we have a great public health system here, but we all know it takes time to move through that. So you have short-circuited options. You short-circuited options, you've added a layer of stress, and now you have a quality of life impact. Imagine if that was completely different. Imagine if there was an insurance company that facilitated a low-cost insurance product because it was delivered digitally. Joan was able to access that, get her specialist care, able to now get back to work with the frequency, deliver to the citizens good health care because she's a nurse, and then be able to have that psychological weight and that stress lifted off of her. You see immediately what financial inclusion does. And remember, financial inclusion is not just having a bank account. It's more than that. It's about the quality of the product and service that you have access to, because you may not feel that there's something that works for you and your circumstances. So, yes.
You gave us a brilliant example of Joan and a very visual example, so I appreciate that. Very clear. Money isn't everything, but money is a lot, right?
It's a lot. It's a lot.
There's so many potential knock-on benefits to one's family as well. Mm-hmm. For breadwinners, for moms, for for the carers in the families to have access to some of these things. So that's super interesting, and I'm interested as well into how fintech. You talked about fintech before, so help us understand a little bit about why fintech or stimulating fintech development locally would make any difference to these things.
Absolutely. So fintech, financial technology, comes in many forms, right? Would you believe a bank card is fintech, right? Maybe an older form, but it is. It's a leveraging of technology to make a financial service available. And the fintech needle moves two critical areas. One, you have the entrepreneurial aspect of people who get into fintech. And we all know that the MSME sector is it's not performing as we would like it to. And the MSME sector, those entrepreneurs talk a lot about the barriers and challenges in order to be able to enter, scale their product, and be able to have something that is viable. So if you're sitting there with these fintech players who have these great ideas, who often come right out of the community that they have been in, have a sense of what good products and services could be, but they meet a barrier. There's this problem where a community level service, something that meets the needs, something that is customized, doesn't get born, and that sector does not perform. And we talk a lot about diversifying the economy. So really we see a lot of good startups that really want to kind of come into the pipeline, but they're not able to do so. So that's one aspect of fintech, growing the entrepreneurial participation, driving GDP and moving our economy along. But now when I explore different mechanisms for delivering my service, I'm now a financial institution, right? I have bricks and mortar, maybe I have tellers, I have customer service agents, etc. I have overhead, right? If I can deliver those products, or if there is a product that can deliver this digitally, and I can drive those overheads down, I'm then able to offer products that may meet people where their pocket can stretch.
Right.
And in doing so, all the knock-on benefits of financial inclusion come.
In the US, for example, and in Europe and whatnot, there's in the spaces around diversity and inclusion, there are often conversations around, well, my bank, my insurance company needs to have Latino leadership or Black leadership or gay leadership because I need to understand the dynamics of those communities. So I almost wonder within Trinidad, I mean, and it's kind of was part of my earlier question of demographically, do you see that there are particular gaps? Because are there people who are not represented in the decision making, either from a policy and government perspective or within the institution around product development or sales or marketing? And do we need to get more people who maybe are part of those communities that are underserved to be more upfront in the conversations, more empowered to work in those institutions or otherwise?
Without a doubt. I think diversity of perspective, diversity of experience, diversity of purpose and aspirations is a tremendous accelerator for businesses meeting people's needs. I think sometimes you can get trapped in your own echo chamber, and sometimes when you are conceptualizing what you think a market need is, and you kind of forge the idea from the inside out instead of from the outside in, I think that's, it sets up a certain blind spot for organizations. I think Trinidad and Tobago is moving in that direction. I see more and more organizations kind of celebrating diversity. I see conversations that happen around the importance of diversity, but I think we are still not creating that empowerment, that opportunity for people who we consider to be marginalized to weigh in and to be architects of their own destiny. Because I'm trying to bring it back to the whole concept of the products and services that, would really serve those communities. And you see that the voices are not necessarily translated into those conversations around, well, how should we do this? What about the design of your interface that you want people to kind of interact with? And this is where data becomes so important. What is the percentage of complaints around the ability to use the interface? What was the impact of the education campaign that you ran to help people understand your product and service? It's great to do things, but when you don't measure it, you don't know how far you're going. And diversity is an opportunity to hear those voices and understand if you're hitting the mark or not. So I think we're moving, but I don't think we're necessarily moving as fast as we could be.
Yeah, I agree. And oftentimes when I do hear the conversation, maybe the starting point's a little bit easier. Maybe that people want to start by talking gender. Mm-hmm. Or maybe they want to talk race. Usually they don't want to talk race. But I do find that when you want to talk socioeconomic diversity, even within organizations and among decision making, it's a little bit hard. I don't see many people asking, well, what % of your leadership team in your financial institution went to a prestige school?
Yeah.
I don't hear those kind of questions being asked yet. Mm-hmm. We want to ask these questions maybe on the podcast. But
I'll leave that to you,
there's certain elements that you do question, well, have you listened carefully? I'm glad your survey has. Have you listened carefully to the people who who are unbanked or underbanked or are not served by the financial sector right now. And super interesting because you've raised the aspect of the voluntary exclusion as opposed to maybe a more deliberate, so it's not necessarily out of malice or it's not necessarily out of ignorance because the people know what they want and they know what they need sometimes. But in fact, there's work to be done on all sides.
Very much so.
It sounds like from the policy perspective, from the governmental perspective, and the kind of work that you're doing as well, from the financial institutions perspective, from the education perspective, and maybe even something around the people themselves, and how do we cultivate a bit more sense of the confidence to chase something a bit harder.
That empowerment.
And empowerment to think that this is actually for you as well.
We're in a good space. There's a real appetite. There's a real appetite from the fintech front. There's a real appetite from the political front. There's an appetite from the regulatory front. And, we are very we're very happy to have that kind of enablement that has been provided by our line ministry. And our line minister tells us all the time, he's like, tell me what it is you need. Tell me what policies need to help be able to move this needle. And I think that those conversations, one thing we're proud of at the IFC is being that central point to kind of coordinate all of the conversations. And we now aspire to actually creating a financial inclusion roadmap and a financial inclusion strategy. Now that we've heard this, now that we know this, now that we have this insight, now what? And we really want to sit down and do exactly as you're saying, hear from the diverse participants within the society so that they can be part of the conversation around what do we need to feel financially included? What will make us feel that, this product, this service is for us? But you're right. Education, we have to tackle it from the education front, the policy front, the regulatory front. We have to be able to have those hard discussions and we have to be data driven. I mean, I can't say that enough. We need to measure the impact of what it is we do. And we need to stop selling our citizens short. Right. They are capable of very, very much understanding and knowing what's right for them and their families. And we need to trust them to tell us what they need. What I've really enjoyed about this conversation is that oftentimes when people might hear diversity and inclusion, they jump to a particular conclusion about what that actually means. Or it is a gender thing or an LGBT thing or something like that. And this has kind of opened my eyes as well. And hopefully for those, our audience to think it goes well beyond. It goes into our pockets and into our wallets and into our lives in a broad way. So thank you so much for joining us here today, sharing your stories and experience. Keep up the good work. Thank you very much, Keep up with the data, and we're going to come in a year's time and ask you for more data. Definitely, and we'll be able to say, we have moved the needle and we now have people financially included, and that we're really proud of, what Trinidad and Tobago has done in terms of diversifying our economy. Excellent. Thank you so much, Dawn. My pleasure. Thank you, listeners, for joining us on another episode of the Roots of Equity podcast as we journey through the landscape of diversity, equity, and inclusion in the Caribbean. By embracing our differences, celebrating our shared heritage, and advocating for a more inclusive Caribbean, we can shape a brighter future for all. We hope that these conversations spark new insights, challenge existing perspectives, and inspire action to dig deep into the roots of equity. Once again, this is your host, James Walker. This episode was produced by Earl Edmund, edited by Jason Charles, with all music by Luke Walker. Until next time.